Welcome back, everybody, to episode 7 of WagMe TV. We have, of course, the homies, All-American Smith,
How we doing?
Akmata, and you'll notice that we are missing our beloved DeFi expert, Soham. He's enjoying the beaches of Portugal, so a good reason to miss a podcast episode if he has to. So,
jealous.
Let him off the hook.
How we doing today, guys? How we doing? Little market craziness going on. It's Bitcoin conference news.
Crazy bumpy. It's just kind of funny. I feel like one day it's down heavy, the next day it's up, and the sentiment just kind of rides with it. It's like when it's going down, people see the daily going down. Everyone's like, "Oh, we're bearing. We're going to 10K," and then you see it go up for a day like today, and then people are like, "Oh, we have some hope." So it's an interesting one. I think it's just kind of yanking everyone's chain like it has been for a while here. So very interesting.
Yeah, I think when they announced those inflation numbers, we actually saw the market hop up a little bit, which was interesting because it was the year over year. I think they were expecting right around 8.4 and it was 8.5, right on the dot. So I don't know if they'd been planning for that and it was priced in, and that's what switch it up, but it's definitely been an interesting couple of weeks here.
Yeah, it's weird because I feel like I'm bullish on Bitcoin, but the market's just so bearish. Like I feel like Bitcoin has never been more bullish, but at the same time, like macro is just tough right now.
Yeah. I mean, on chain fundamentals they look great, but I mean, I think that's a good segue for us. I feel like CPI news that was kind of super large, right? As Evan said, came out, it was 8.5, right? And then
8.5 year over year, and then 1.1 in the last month. That was
right.
The final. Yeah.
And the expectation was 8.4, right?
Yeah, right around there.
So I think it was interesting because I feel like leading up to that is when we saw kind of a nice little downtrend, right? It's kind of like the buy the rumor, sell the news type of thing, right? It's like markets anticipating this bad news that's coming. Oh, inflation's going to be terrible. We've been hearing about it for months now. And then when it comes out, kind of what was expected and everything's priced in, as they say, kind of just starts to go back up, which is so interesting, right? It just shows that like fluctuates with everybody and just expectation over reality. And it's really interesting how that works. It almost feels like, I don't know, it's like almost manipulated a little bit. Super odd, but I don't know.
Absolutely. And I think as we you see everywhere, there's recession talks, there's always people talking about key indicators or signs of possible recession or possible bullishness going forward. And yeah, I think it's like an interesting time where we've come off this crazy 2-3 year run, probably even more than that, and people are trying to figure out how healthy is this economy. And when you look at the inflation numbers over the last year, these last couple of months have a big driver of inflation has been gas, going up around 20%. That wasn't something that was up earlier, actually late last year. We saw housing, cars, raw materials. So it's funny how it's different sectors driving it. And I think it's like, to your point, like it's people just don't really know the health of the economy at the moment. So interesting times.
Super ambiguous. Nobody knows. Are we going up or are we going down? It's kind of like.
Yeah, that's the thing. Like I don't know. I guess the other thing too is what people are watching for on like a macro, like from a macro viewpoint, is the next Fed hike is expected to be on May 3rd. So like the next meeting. So some people have said they're going to do like 50 basis point or even a 70 basis point, which I think could be pretty. I mean, that's definitely going to shake things up a little bit. I don't know what that does to Bitcoin, but overall market, that probably wouldn't be great if we did more than what we were expecting. But
right. And then there's a question of, if that happens, do the 5 or 6 other hikes that were expected later in the year happen? Are those taken down from 5 to 6 to 3 because they've raised it so quickly, so much. So yeah, I think it'll be interesting in the crypto space.
definitely wouldn't want to be the Fed chair. I'll tell you that much. In a sticky situation here.
Don't want Powell's job. No way. No
There's so
way.
many people riding on every word.
Yeah.
Every word. I think the other couple things, right? I feel like one of the things that's been flying around Twitter a bunch, you've been hearing a lot, is inverted yield curve. Everyone's talking about it. It's not something I'm too knowledgeable on, which is tough because we wish we had Soham here for this one, I think.
Yeah.
But for those of you that aren't as familiar with it like I was, I had to kind of dive in a little bit. So it's often when we're comparing the 2 and 10-year bond yields, and we're comparing them to each other. So short-term bond yields theoretically should be less than our long-term bond yields. And in situations where that's not the case or that's inverted, we typically see some pretty bad action going on in the market. So for instance, some of the big inversions were just before the dot-com bubble. The second was just before the great financial crisis back at the beginning here. And then the other was COVID, but I know we were all talking about this. It's kind of like not exactly related. It wasn't necessarily financial based. It was more of like a black swan event that came, kind of swiped things out. But it's interesting. I know I watched one by a quick video by Invest Answers, James from Invest Answers, and he was showing a couple charts around how that's kind of flipping back and forth. So it's like under for a second and inverted, and then it pops right back up. So it'll be interesting to keep an eye on. I think that's another piece that it's just, everyone's nervous. There's nervousness in the market. No one knows where it's going. And I think that uncertainty, people are going to start to speculate. And if they see, oh, this is a trend that happens, it's going to make people a little bit nervous there moving forward. So.
And I think when we talk about, there's all these, negative indicators that we see, but when you look at a lot of these things that are driving inflation, talking about housing prices, talking about used car and new car prices, I mean, there's a lot of consumers sitting on the sideline right now because they couldn't hop into the past market with how fast it was moving, how much prices were inflated, and they're sitting on the sideline cash rich, ready to hop in. And so it's not like we've just pushed all this demand into 2 years and for the next couple of years there will be a drought of demand. And I think that's why you see people flip-flopping back and forth is, there's still plenty of demand out there. Just a lot of these things are overpriced, and you could see that being, transitory, like the Fed said a while back, but who knows?
Yeah.
Or it could be here to stay, and then those consumers aren't there.
No, that's a great point. And I think to that point, I think at the same time, I was looking at a stat, at the same time that inflation rose 8.5%, wages grew 3 to 3.5%. So we used to have right after COVID, obviously a bunch of people were flush with cash, with the stimulus, the multiple stimuli. And so when people had that free cash, obviously, you open up Robinhood, you buy some GME or you buy some other stocks, slowly but surely people are going to feel a little bit more of a kind of, shortening up of the pocket. But I don't know how long that's going to take, but eventually.
Right.
Absolutely.
It's kind of interesting. There's a couple different types of inflation, right? The demand pull inflation, which is with the housing market, what we're mostly talking about, which is that difference when you have a shortage in a sense of supply, which was kind of the last couple of years. That's that difference in demand, and that shortage in supply results in that price appreciation. And then there's that cost push inflation, which really is more like when the cost of production increases. So like Evan mentioned, prices of things that are inputs, like raw materials, labor, that increases the price of that product. And then you just have the built-in inflation, which is what we often hear about, which is the CPI, everything like that. So it's interesting. I feel like we're hitting a wave of all three of these types of inflations just spiking. Right. So it should be interesting to see how we start to handle that. But yeah, very, very odd.
Yeah. I feel like everyone's
It's
just kind
not
of holding
that
their breath.
odd.
But yeah, not odd when you
Everyone
print money
kinda
for
saw it
decades on
coming,
end, but
I guess. Yeah. I guess, right?
but at the same
Yeah,
time,
rich get richer, right?
yeah.
That's the idea.
I think also an interesting point about supply chains and inflation is when you look at, I know we've talked about it in past episodes, but Ukraine and Russia and what's still going on there. That is an area of the world that puts together 25% of the wheat and grain production that the world uses. And when you look at the consumers of those, obviously the US is a big consumer, but you look at China, they're a heavy meat eating country that needs to feed their pigs and cows. And I know I'm going into it a little bit here, but you start to see how inflation not only affects the US, but it starts to affect many other countries. And it's not something that, is that we just feel. There's a lot of other economies around the world that are kind of stuck in the same cycle that we are. So,
and the US isn't the only one going through inflation, right? I mean, I think a lot of the European countries are printing like crazy as well. So yeah, just a wild time.
Yeah, just a little cow deep dive there.
A little cow deep dive. I think the only last, so I did see some interesting news, some on-chain pieces from, and I could actually share this if that would be helpful.
Yeah,
but it was actually where miners were starting to sell around that 42K mark, right? Which that enhanced that sell-off that we saw the other day, which was pretty massive. Right. But it's interesting because I feel like more miners in a way are desperate to raise cash, right? Mm-hmm. So they want to buy rigs, and the reason they want to buy rigs is so they can get more Bitcoin. So it's interesting, like they're selling off, seeing like a little bit of weakness in the market. Let's sell here. It kind of runs down a little bit, but that gives them some cash flow in order to start to put towards mining more Bitcoin here moving forward. So it's like sacrificing now some of that Bitcoin that you've mined in order to get more later. So it's kind of, I don't know how to really interpret that sort of news. I don't know if you guys have any input on that. Like it feels a little bit bearish. It's like, oh, we see weakness in the market. Let's dump some of this so that we can basically stack money to get more rigs, to get more Bitcoin for later, because we're long-term bullish on it, which I think all of us are. So it's kind of bearish, but at the same time, kind of bullish for a long-term perspective. So like, I don't know. Do you guys have any opinions on that?
Yeah, I mean, I think you're right where it's like short-term bearish, because I think they're probably trying to take some profits off the table, like with the uncertainty of the Fed, like comes like, hey, like, do I really want to risk it going to, 35 and I take profits here, and even if it goes to like 45, 46, I'm chilling. And I think a lot of those miners are kind of like their timeline is based on when that last Bitcoin is going to be mined, which I think is like 2030, right? Or 2030 something. I think the last Bitcoin is supposed to be mined. So I think a lot of them are operating on that kind of timeline, but that could also be just a general assumption. But I kind of see miners, like you said, as more of like a long-term involvement in Bitcoin.
Yeah, I think that's a good point, because they're probably looking at different metrics than we are. I know we do a lot of TA, but these guys are able to look at the gas fees that they're seeing on a daily basis. And that's really determining the amount of transactions that are happening within the network. So you can see where, they would see a slowdown in some areas of the network. Maybe it's no longer useful for them to continue their keep running their rigs if Bitcoin drops at all. And so this could be them just exiting, and who knows, that's a whole nother segment of the crypto community that I don't feel like I at least get to dive into much or hear much from. And you can see where a lot of these miners might have inferior technology, where they know that their proof of work systems, like their computers that are running this, aren't going to get the type of returns that they've been seeing the last couple of years. So you can see where this is them exiting and waiting to get in at another time when a pump comes.
Makes sense.
That's a good call out.
Yeah.
Mata, did you want to share your screen with something?
I just had the little note here. on the on-chain data. Yeah,
Oh,
I can share it really quickly, and then we can just drop the article in the description. But yeah, let me share that. Here's where I kind of got that from.
Oh, yep.
But I think the last piece of news that we can dive into was the Bitcoin conference. There was supposed to be some big, massive news. It was supposed to be incredible, right? I think everyone was kind of thinking it was going to be on par with El Salvador, Bitcoin legal tender. Like, who's next, right? Well, who's the country that's going to do it next so that we can start to push this more and more forward? So the big news that came out, and I'll share my screen here briefly. I know there's a ton of articles on this. This is just one that I found really quickly, but Jack Baller, the CEO for Strike, announced at the conference, pretty much right after he was talking about the lack of innovation and in payment technology in general, that they were partnering with Shopify, Blackhawk, and NCR to power transactions across Bitcoin rails, right? So they're using Bitcoin Lightning payments with their merchants. And as someone who's, and I know Sia's in on this as well, run a Shopify business in the past, like I can kind of see the power in that. I mean, it's definitely not like, it's great news, don't get me wrong, but it's certainly not a country adopting. And I know Twitter sphere was talking about Apple was going to do this and that, right? So it's not like a big, massive company like Apple going in and entering, right? So it wasn't the news everyone was hoping for, which could have contributed a little bit to that drop. But it is, I mean, it is a pretty dang big deal. Like, you can start to actually use Bitcoin essentially as a currency using that Lightning Network. Any thoughts on that, guys?
Yeah, I mean, I think you bring up a good point of like, it's not quite as big of news because I think it's still like, we still need to look at the data now and see actually how many people are enabling Bitcoin for their stores and how many of their customers are actually paying with Bitcoin. Cause like, you probably noticed this, Mata, but like maybe like when you're running your Shopify store, like most of the payments were actually like, at least a lot of mine were PayPal. So like if like a lot of that switched from like, okay, instead of PayPal, I can just use Bitcoin for my Bitcoin account. Like I could see that being pretty impactful. But if there isn't that adoption, like PayPal has, then it could be kind of difficult.
Yeah, could just kind of be a nothing burger. I guess what it does is puts it into perspective, right? It's like, we're trying to push this forward. And I think who, especially right now with all the inflation, is trading their Bitcoin, like a very hard asset, I don't know, and using that as currency. I don't see that as really the main use for Bitcoin, but I think it's really cool, the adoption of that mentality. Evan, anything on that?
Yeah, I think it could be something where they're trying to reach some of the customers maybe in Central and South America. You know, you talked about how El Salvador, is a major holder of it, and that's something where there's, I'm sure, a decent, maybe 1% or 0.5% of the users on Shopify would rather use a cryptocurrency or prefer using that over fiat currency. And so, maybe that's just them trying to capture that part of the, market. I think that's very interesting. Also because you're talking about Strike, right? That's the company that's implementing. And I think that's kind of a new player in the space. And so it'll be interesting to see how, this implementation goes, because you could see, I know Shopify is more for small businesses, and maybe like individually owned businesses, but working at Salesforce, who knows if it's something that could work at a CRM or B2C commerce site of that scale. So it'll be interesting to see how it goes at a lower scale, like a Shopify.
Yeah, we should definitely keep some tabs at kind of what that adoption looks like, because I think you're totally right. Like, it's kind of small potatoes in a way, but I mean, Shopify is, I mean, at this point, are they like a third market share of e-commerce at this point? Do we know?
I was going to say, when Evan brought up a good point of like, even if it was just a small percentage, because Shopify accounts for $319 billion of global activity online a year. So like that's a lot. I mean, even if they captured like a 0.25% or like even less than that, like it's a lot of money. But yeah, it's just crazy.
Yeah,
they're huge.
So that was the big news. I mean, obviously there's a ton sorry, there's a ton that goes on at the conference, and I'm sure it's absolutely incredible. And from what I've heard, it's really adapted over the years, which is super, super cool to see. But I think that's another thing with expectations versus reality, right? Everyone was expecting something massive. And then that's kind of what they got, which still a really big deal, as we've kind of been discussing, but maybe not exactly on par with what they were thinking there. So could have kind of helped with that downtrend.
I think another point here is that when you look at crypto and blockchain technology, it's most useful in marketplaces. Shopify in itself is a marketplace platform. You could easily see where they're trying to add certain types of integrations. If they think that blockchain Web3 can catch on, this is a way to early assert themselves in this ecosystem and basically ensure their survival, because they're able to easily plug in with a lot of these distributed marketplaces that are out there. So from Shopify's standpoint, it seems like a smart play, because they
can't care. I mean, can't hurt, right?
So yeah, I think you're right though. It's small potatoes at the moment, but you know, if you see something successful happen here between a Web2 company, right, and a Web3 company where they're able to easily integrate, or just, you know, crypto sales over a marketplace platform, I'm sure it could grow significantly in the future.
Yeah,
absolutely.
Just take it more seriously as like a currency in that sense,
right?
Which is cool to see.
Yeah, it's more how you mentioned it, Mata. It's more like a directional indicator where Shopify, Shopify and Strike have sat in their boardrooms. They plan this out. Like, they see the addressable market, they see the opportunity. So it's more of like okay, these people with millions of dollars of research and funding behind them, they're doubling down on it. So it's like, no, it's not really big news now, but 5 years down the line, 7, whatever it is, could be big.
Yeah.
No, I like that.
Well, boys, I think we hop into NFT Worlds if we're good on that.
Our specialist has a little breakdown for us today, so this should be super interesting. It's something we've all been really interested in for, I feel like, a while at this point. It gets mentioned in a couple of the episodes, which is always cool. And I think just speaking for Sam, since our moderator's gone, I think it's been something top of mind for us that we've wanted to dive a little bit deeper into and cover and ask some questions around. So Sia, go ahead and take that away for us.
I think Evan's going to dive in.
Or Evan, are you going first?
And give us a little kind of overview, and then we'll kind of go back and forth and kind of break it down a little bit.
All right.
Just create a discussion.
I can definitely run us through a quick intro. So yeah, let me go ahead and present my screen. But just to start, NFT Worlds, this is what would you call it? A multiverse play? Would you consider it a metaverse play, Sia? What's kind of the terminology you would use for that? Also, I need to share my screen.
It's like the way I kind of best describe it is like a metaverse as a service almost.
Okay.
So it's like you can build metaverses on it. Like, it's not where Sandbox is like its own metaverse. Like, people are building metaverses on these NFT world plots. And the NFT world plots are a lot bigger than Sandbox. So the idea is that you can build a metaverse in each one of them, as opposed to just having one big metaverse.
Absolutely. Yeah. And so I think what's the main differentiator between NFT Worlds and Sandbox, TCG Worlds that we've covered, even Decentralands that we've hinted to in past episodes, is that this is really a platform that's building to a customer base that already exists. This is tapping into the Minecraft community, which is one of the largest, if not, I would say one of the largest games at the moment. And historically, it's got over 100 million active users a year. I believe if that's correct, Sia.
Yeah.
And it's been around for years. I remember, 10 years back when kids, in 8th grade were playing Minecraft. So it's something that's extremely sticky. The customers are the users are very loyal. And I believe ArcDev, the founder of NFT Worlds and the creator of it, he was also part of the Minecraft community. And so what they're looking to do is, if you haven't played Minecraft before, it's an extremely blocky UI. Essentially, if you could, let's see if I can pull it up really quick, but it's developed by Microsoft, and it's essentially these different voxel. It's a voxel environment where you got a 3D block, and they make up most of the virtual world that you're within. It's an enormous virtual world, and you can almost create your own ecosystems in there. Like you can chat with other users, you can build, you can design, you can create almost makeshift businesses in there. And you see the users of Minecraft spending hours a year, just very invested in the game. And to be honest, they're not getting paid for it. It is simply because they love to play Minecraft. And so when you look at NFT Worlds, this is 10,000 different Minecraft worlds in itself. And that would be awesome if that was just, the basics of what NFT Worlds. But what ArcDev and the team at NFT Worlds has been able to do is they've been able to integrate their world cryptocurrency within there. And so let's see if I can pull this up. This is their world token.
Also, Juice World.
That one came off.
Yeah, Juice World came up.
And so this is the world token that each of the 10,000 NFT plots are able to easily integrate with. And so you're able to take this plot of land, have a Minecraft designer or developer come in, create their own little world within there. That designer doesn't have to have the Web3 or blockchain technology to put together their own cryptocurrency. They're able to use this out of the box world token that ArcDev and the team have put together. And because of that, it's taken almost the science out of creating P2E gaming. No longer do these developers and designers that want to create Minecraft ecosystems have to be able to hit APIs to make sure payments go through, or go through and figure out tokenomics. They're able to take a designer, create an awesome world, and create an ecosystem, a P2E ecosystem around it. So just quick revision, quick overview. Already hitting a customer group that exists, an extremely sticky customer group. Already has tokenomics and APIs for their world token built into the platform. And you're able to easily hop in and explore worlds, create worlds as a user. So that's my general takeaway. Sia, I'll hand it off to you to kind of dive in further into the different worlds that you've seen. Also, just the stuff that ArcDev has said is probably coming in the future here.
Yeah, I think and that was a great breakdown. I think the most basically the newest thing that has come out in terms of news is the avatars that are going to be launched. So there's going to be a collection called Genesis Avatars for the NFT worlds, and they're going to act as these kind of playable block characters, like Evan was saying. And people are going to be able to run around in the world regardless of whether they have, an NFT world or not. So there's going to be 10,000 that are allocated to NFT world owners, and the rest of the 5,000 are going to be a public mint. And it's interesting
15,000.
because, yeah, 15,000. Yep.
Very nice.
So 5,000 will go to public, 10,000 will be reserved for world owners. And what's unique about it is that it's similar to these other projects like Stuxverse, where you actually get a monthly yield, a monthly token distribution in that world token. But instead of like a staking reward, it's a percentage of marketplace yields perpetually, so forever. So there's no 5-year limit or anything. So with this, you're really, if you wanted to buy this independent of a world, you're really betting on the future of the ecosystem and people using the marketplace. But they're also using it as a big fundraising opportunity because NFT Worlds is a free mint originally back in October. So they have been kind of running on just like their own funding. And so they're going to be taking home like 6,000, I think it's 6,000 ETH from this because they're 0.4 each. So like they have crazy plans to, build out their P2E mechanisms, add additional marketing, but this is kind of their first huge influx of cash. So besides obviously the crazy volume that's traded on OpenSea for NFT Worlds, but yeah, I'm definitely curious to see where this goes because this kind of integrates like people who aren't necessarily world owners or Gray Boys owners, like they bring them into the world and that you can play on any world with this avatar.
Right. Yeah, I think that transaction fee, being able to take the tokens from the transaction fees is huge. It's something where we've looked into other NFT collections like Stuxverse, Mata you mentioned, even looking at buying world token by yourself, like just individually. And it gives you an even easier way to get plugged in. And I love that they did this indefinitely. Like this is something where that you've bought into the ecosystem and you're going to be able to grow as it grows. So I mean, I'm very excited about that. I'm excited to see when that comes out.
Yeah, and the idea being too, like if you have so first of all, like if the marketplace and if the ecosystem is successful, there's not much reason, unless you're in dire need for like the cash, there's really not much reason to sell the avatar. Like if you play in it and you're getting yield too. So the idea behind that is that obviously the floor price would rise quicker than, let's say, a normal project that's having to build off of announcements or build off of this, like hype essentially. Like they're already tied to NFT Worlds. They already have, some sort of like payout mechanism or utility. So I'm interested to see what happens. Like a lot of people kind of reacted to the 0.4 mint and they were like, whoa, like that's pretty expensive, which it is expensive on a mint. But given that they've airdropped like a bunch of E3 to people, they did a free mint to start, like they've built so much, like it's almost like their due time to get a little bit of funding to kind of take it to the next level. So I don't know, we'll see.
Yeah, I think just following this project, since really you mentioned it to us back in the fall or early winter, it's been impressive how quickly this team has built and delivered on their plans for the future. They're moving through this, and yeah, I'm excited to see as they're able to ramp up their servers and allow more customers or users at once on their platform. It'll be interesting to see how much of the Minecraft user base are able to pull. We talked about just being able to take 0.5% or like 1% of a customer base. I mean, you take 1% of a Minecraft customer base, and that's 10 million, users a year.
Mm-hmm.
And so
I think it'd be interesting to see, like in the same vein where we were talking about Strike with Shopify and the adoption, like do we know what the adoption's like for some of these worlds? Like, I mean, there's 140, 150 million Minecraft users. Like, how many people are going into the different worlds that are built in via the NFT worlds? Like, do we know if is that something that's free to see, or some worlds obviously are probably more than others? Like, do we know what that looks like?
Yeah, I don't know. What so I don't know if you can see it world by world, but ArcDev does like weekly updates on how many people are playing. Last month they hit their first day with 10,000 daily active users, and just a couple of days ago, or just like 5 days ago, in one day, 4,200 new players were added. So that doesn't include the daily active players. That's just new players that signed up with accounts. And what he's saying is that as he's tracking it and where these people are coming from, he's like, it's interesting to see like more than 80% of them are non-crypto native. So they're not coming from like OpenSea or like Etherscan, or they're not coming from MetaMask. They're not coming from like, these are people who originally had a Minecraft account and don't even have like a MetaMask. They're just coming in. So like, that's the kind of big differentiator, I think, that it kind of flies under the radar. They built a Polygon layer on top of each NFT world so that you can use Polygon for gasless transactions with World. So basically, you don't need a MetaMask wallet. You have an internal wallet in the world. So you don't need to do any sort of crypto setup. So you come right in, you play, you have your world balance. If you want to extract your world balance, then you're going to have to send it to a crypto wallet. But you can get in and do it all. And go ahead, Evan.
I was just going to say, I think that's kind of like the next phase of the user experience that we're seeing with these dApps, or, this is NFTs, but these dApps. Audience does the same thing where, you're able to come in as a user, never have a MetaMask, never have a Coinbase wallet, and they're able to track that on your behalf, which, it takes a little bit of security out of your hands, but in terms of user experience and onboarding users that are not Web3 native, that's huge.
So. Yeah, that's a super cool stat to me, right? Because I feel like everyone involved in NFTs, like you mentioned, right? They have MetaMask, they have some sort of wallet, they're very involved in this space specifically. So it's cool to know, right? They kind of latched on to this massive group of Minecraft users, and they're starting to be able to actually utilize them as well to start to kind of get exposure out there for their token and how this all works. So I think that's super cool, and it's cool to hear that it's a little bit of a different approach that they're taking in general. So no, I love it.
Yeah, I mean, I think that's one of the hardest parts, at least now. Like when we were all, I know when I made my MetaMask account, I was like, this seems sketchy. Like, I don't know, this is weird. Like I'm accessing my money via my browser. Like, this is weird. Like, I can't even imagine people who don't even like Bitcoin or don't even invest in Bitcoin. They're like, I'm not making this thing. So I think it's just a very forward thinking way to say, okay, like if people just want to play the game, earn cash, like they don't have to be, they don't have to have a basic understanding of crypto even. So
yeah, let's get people exposed. I'm all for it.
Exactly.
Yeah, that's pretty awesome that they're able to do that. I love that they've been able to put that Polygon layer in. I know I'm not real familiar with how Polygon can be put on a lot of these cryptocurrencies, but it's one of the first times I've heard of it being put on, some, I don't want to call it an altcoin, but it's ranked 2000 on CoinMarketCap. Yeah. So it's interesting to see these people putting or Art Dev putting Polygon on top of World, just because it's impressive how focused they are on user experience and making sure that the basic Minecraft player can come in easily and within a few clicks probably be ready to go on the game.
Yeah, and imagine them seeing some of the ETH gas fees. They try to make some sort of transaction.
Yeah, exactly.
Done. That was calculated. But that's a good point, Evan. I mean, maybe we should do a deep dive into Polygon as well, because I'd like to know a little bit more. I know ETH's kind of the big, massive player in the space, but I know they kind of rely on Polygon for a lot of different reasons. So it'd be cool to dive into that as well. Maybe we do that next week or one of these weeks here following, since we're wrapping up this show here shortly.
I totally agree. And I think, we're seeing this on World Token. It's probably only going to become more common with others. So I think one of these coming episodes, we should definitely do it.
Awesome.
100%. Well, I think that just about does it for episode 7. Thank you everyone for tuning in. Soham will be back next week. Hope you guys enjoyed this one. Like, comment, subscribe. Let us know if you're NFT World fans, if you're following that project. Like, we'll keep updating you guys, but would love to hear suggestions on what to cover, and thank you all for watching.
All right, y'all.
Cheers.
Later.